Hey everybody, welcome to another edition of Zach's Live Trader. I'm Dave Bartosiak with you as always. It feels like it's been so long. Yeah, it was like 7 minutes ago. We were talking about Dish Network, but now we're gonna switch gears here and talk about Mylan. Now, Mylan has been in the news probably for the wrong reasons because they had that life-saving EpiPen device that they decided to jack up from $100 for a two-pack to $600 for a two-pack. Now, that's cool and all, but not in today's environment. When you do something like that, you end up getting in front of a Senate hearing. So the Mylan CEO got grilled on Capitol Hill, which I'm sure everybody loves to do, and they've been in the news for all the wrong reasons. Now, being super capitalist, right? Obviously, with this in this whole thing, sometimes I find it tough when the government kind of starts talking about this stuff and kind of gets in. It's like, well, they're a private company. Why are you telling them what they can and can't do? But there is sort of like an ethical test that's out there for whether or not you're doing the right thing when it comes to drug pricing. And one of those tests is like, is this a life or death situation? So do the people that buy this have a choice of whether or not to buy it? So that's when the gray area goes, right? It's like, well, if I have an allergic reaction, I don't care how much that thing is. Like, I need it immediately, so shoot it into my heart so I don't die. So there's that, right? But I don't really want to get in that whole discussion, right? Because I don't care, and my opinion on it really doesn't matter. But what does matter is how has this impacted the stock and what do I think about it? Plus, we're going to take a look at the options chain here, of course, as always, give you a bullish trade and a bearish trade, and then in my humble opinion, which one of those I believe is going to be the best. But you're not going to know anything about the follow-up to this trade unless you're a member of our Zach's Live Trader service. So make sure you get on board with that. If you want to know more, shoot me an email, livetrader@zax.com, and I'll be sure to send you all the information about that free 14-day trial. But it's just $9.99. It's $9.99, not $999 a month. So it's something you should all go ahead and check out, livetrader@zax.com. Shoot me the email. All right, so let's go ahead and look at the detailed estimates, the price consensus and EPS surprise chart here on Zax.com, see what we can glean from this. So, as always, the black line represents the price, which corresponds to the right y-axis. The little green arrows are earnings beats. The little red arrows are earnings misses. These multicolored lines represent the evolution of our Zax consensus estimate over time, okay? Now, a few things to point out here which are just leaping off the page at me, okay? It was all good, right? Everything was going great. You had estimates which kept getting revised to the upside. You had growth the next year that kept getting revised to the upside. And you had a stock that kept on marching. This is a stock that was $20, $17 at the end of 2011, got all the way up to $76 in 2015 in the spring. And these estimates is actually still ticked up. 2017 is very bullish. The 2016 numbers look great. But what's happened is that the stock has started to unwind here to the downside, and estimates have begun to tick to the downside here. Now, does this small drop in EPS estimates warrant a move that cuts this thing in half, right? That shows me that there was a certain amount of growth premium baked into this stock that investors have since completely eliminated. They just eviscerated it. They crushed it. The stock's trading something like 7 times earnings, which for, a drug company is nothing, especially when you've got growth like this. So investors are not too happy, I guess, with this whole story. But again, when you're on Capitol Hill and you're up in front of everybody and you've got to justify why you've taken this drug and multiplied it by 6, people get mad. The other thing is, there's a generic that they have to worry about now. So that pricing power that they thought they may have had perhaps isn't there. Now, again, I don't want to get into the whole economics of drug pricing here because it's only supposed to be like a 15, 20-minute show, and frankly, we do not have the time to get into that. But what you do need to know is that the pricing power that these guys thought they had may not be there, in 2017 when Arrival comes on the market, and they're pretty much set to do that. So that's kind of one of the risks we have moving forward. So that's kind of why this looks the way it does, okay? Now, don't take my word for it. Let's take a look at the detailed estimates page and look at what some of the other analysts are saying. So right now, it's a good day, by the way, for everybody right now. The market's rallying because, you know, pretty much everybody's relieved that Hillary's not going to go directly to prison if she gets elected. So this is Zach's rank number 4, sell right now. Value style score of A, growth D, momentum of C for VGM of C. But why the sell? Now, they are going to report after the bell on Wednesday. But like I told some of you, I'm going to be working remote, so I won't be here in the studio to go over this. So that's why we're doing it this morning, or this afternoon, to get it banged out of the way for you so you can have something to trade. Look at this, though. 5 analysts came out and dropped their earnings estimates for the current quarter over the last 30 days. 5 done so for the next quarter, 5 for the current year, 5 for next year. Really, that was a function of Mylan coming out and lowering their guidance on October 7th. They came out and said, well, you know how our range was 470 to 490, or I'm sorry, our range was 485 to 515. I think we're going to drop that to 470 to 490. So they dropped their guidance there a little bit, and the analysts followed suit. So really the effect was we go from $1.60 to $1.51 for the current quarter, 145 to 140 for next quarter, 495 down to 481 for the current year, and 592 all the way down to 560 for next year. So that's why you saw that little curve down on EPS. And that's why this is Zach's rank number 4 sell right now. It's not because of any stance I have or any of my other fellow editors over here, analysts. It's because these 5 analysts have already dropped their numbers. So when you see that, that's when you're going to get a Zach's rank number 4 sell, right? We're looking at what the other analysts are doing. They're dropping their numbers, so something must be wrong, right? Now, whether or not that's just going to justify the stock dropping further remains to be seen. So that's kind of what you got to let marinate when you're thinking about this stock. Is the EpiPen drama over? I mean, that's the main thing here, because that's what's hanging over the company. And a huge chunk of their revenue does come from their EpiPen business, right? So if another generic comes in here and undercuts them and gets a big chunk of that market share, that could be a major problem for Mylan. So I think that's why you're seeing what you're seeing in the stock. But is it oversold? I don't know. But this is the time, as always, where I take a look at our take a look at Yahoo Finance to the options page, and I try to break down a bullish trade and a bearish trade, and then give you my opinion on what I believe is going to be the best play for shares of Mylan. So again, you're not going to get the follow-up to this unless you're a member of our Zach Live Trader service. So if you want to know how to manage a trade like this once it's already on, shoot us an email, livetrader@zax.com, so we can get you squared away for just $9.99 a month. Get your 14-day trial, and let's get to business. Get on my distribution list so I can tell you when all these videos are coming out. Let's learn how to trade some options, right? All right, now let's take a look at the detail at the options page here on Yahoo Finance. Now, this is what I do always. I go to the options tab, and I want to pull up the front week expiration. So I want the options contract that's going to expire right away. That way it has the least amount of time value that's in there. So if the time value is all gone, then it's really just the volatility, right? That's in there. And obviously the intrinsic value, the difference in the options strike price versus where it's currently trading. So as a quick little calculation here to see what the market is pricing in terms of volatility, is I look at the straddle view of the front week call. I go at the money. I take a look at the cost of the call option and the put option, add them together, and what do you got? Yeah, implied volatility. You guessed right. Okay. So let me just get this here. So the stock is, we got to wait for the stock to load here. So give me just a second. We get our calculator ready. It's coming. Any day now. So We're going to look at this weekly at the money call here just to get an idea of this implied volatility. But I don't think I'm going to want to trade anything just in this front week, depending on where the price is, okay? Because that doesn't give you a lot of time for what I like to call the post-earnings drift, okay? So that post-earnings drift is really the market reacting to what the news was on the stock, okay? So we need to take this into account. All right, this is what we're going to do. The stock's trading at 36.50. You're just going to have to trust me. All right, so the stock's at 36.50. We'll wait for Yahoo Finance to finally get around and catch up with us. The at the money call traded a $1.32. The at the money put was a $1.25. So you're talking $2.57 is sort of the implied volatility at the money on shares of Mylan. Now divide that by the 36.50 strike price or where the stock's trading. That's a 7% implied move here on earnings. 7%, $2.50 about on a stock that's trading 36.50. So that means 34 to 39 is where this options market is pricing things in. So this sort of 34 to 39 range, right? Okay, so that's kind of the realm of possibilities here. Now, I do want to take a look at this volume here, these open interest numbers. These are actually decent open interest numbers in the hundreds here, right? 400, 500, 100. So there's a decent amount of liquidity there, but I want to see what sort of liquidity we have just in the next week. Because typically what you'll do, okay, so the third Friday of every month is the monthly expiration, and that's the much more popular contract that people tend to trade. So your monthlies will have more activity, and then your quarterlies will have even more typically. So if you looked at December, there'll probably be even more action there. And look, now Yahoo Finance wants to play along and tell us 36.50. Well, that's good. Okay, now when you start looking at some of these numbers here on the open interest side, you can see the much bigger numbers: 2,700, 58, 16, 32, right? And then 7, 52, 21, right? Okay, that's good. Now I wish this data would fill in a little bit better for us, but it is what it is. I'm going to reload this and see if we get if the rest of this fills in or not. Only one way to tell. Anyway, we'll go ahead and put this back together. So at least Mylan's loading for us on Yahoo Finance this time. You must all be going to Yahoo Finance all at once and we're blowing it up, right? I'm sure. Okay. Well, it's not going to fill in for us. That's fine. Not worried about those strikes anyway. So, all right. So let's go ahead and put together a bullish trade on this, right? Now, there's a couple of different ways you can do this. In the previous video, I wanted to buy a little bit of time, and I went out and I put on a call spread on shares of Dish Network. That's what I was kind of looking at. It went out to December. I figured any time value that I buy at the money on the call, I could sell further out, and it's okay. That's one way to be bullish. Now, the other way to be bullish is just to sell into others' bearishness, right? So instead of being long a put spread, along a call spread to be bullish, I can be short a put spread and be bullish, right? So that's what I think I want to look at here for shares of Mylan. So let's take a look at the 37, so kind of the at the money put, right? If I do think that this stock is going to go up. And then I like to kind of go where the liquidity is. So if I see 2,100 contracts here at 35, that's nice. And remember, 34 was kind of the bottom end of where this was pricing in anyway, right? Sort of 34 to 39. So it just makes sense to me that you would have that, you would have some interest there, right? So if I'm bullish on this, I want Mylan to go up. I think it's going to go up. So I want it to go past 37, right? If the options market is pricing at 39 and I'm only thinking 37, I think I'll be okay, right? As long as I get the direction right on this trade, if I am bullish. So the way to do this is you would sell the 37 put for $2.90. Now, just doing that's going to give you not unlimited risk, but 37 minus 290 risk, so $34.10 of risk. You probably don't want all that Probably don't want it. So you could just go ahead and sell the $35 put for 88. I mean, buy the $35 put for 88 cents. So now this way, what happens is you're going to get $2.02. That's not the trade. Hang on, guys. It's one of those days. Look at the list. Open up the list. Open up the list. Sometimes I catch myself slipping mid-slip. That's what happened there. All right, guys, look. Let's piece this together again, like a smart person. Okay. All right. I'm going to go out on a limb and say that this 37 Yahoo's lying to us. There's no way that that is that much money. That doesn't make any sense. That makes no sense. I'd love to see the data feed here on Yahoo because I do not believe that's correct. I'm totally going to ignore that. Guys, look at this. If you sell the 37.50, I'm telling you this is a bad print over there. That makes no sense. Why would the $37 put be trading almost at $3 and the 37.50 be at $2 and then the 39.50 be at $3.6? None of that makes sense. How on earth would the $37 put be more expensive than the 38.50 put? That does not make sense. And just by looking at these call letters here, it doesn't clarify anything for me. Okay? So we'll go back and review that later. I'll do a quick little follow-up thing because Yahoo Finance is something's wrong. Something's wrong there. Okay? These might be like a split adjusted or something. I don't know. I'd have to go back and figure this out because again, even if you're looking at the 33.50 here, you've got something that doesn't make sense. So anyway. Yahoo. Anyway, okay, so check it out. So if we were short the 37.50, I'm going to have to know that on the other side too. Anyway, so if we're short the 37.50, guys, I want to clarify this. That's where a ton of this action is. So short the 37.50, that's between 194 and 201. So you're talking, let's just call it 195. Let's call it 197. Okay. All right, so 197 I can get for the 37.50 put. Sell that. 197 coming in. All right. And then if I buy the $35 put, it's going to cost me 87 cents. So minus 87 cents. All right, this looks more normal. So that's $1.10 that I would take in premium, short that put spread, okay? And $1.40 is what I would end up having at risk here, all right? So I could make $1.10 on $1.40, so that's potentially a 78% return. Now what has to happen for me to get 78% is that shares of Mylan will have to close above $37.50 at expiration on November 18th, okay? Now, my suggestion, if you're putting something together like this, right, pull up your real-time options quotes wherever you might have them. Because these Yahoo numbers right now are looking pretty fuzzy for me. I'm pretty sure that this makes sense. And again, we are live here, so I can't exactly pull up my trading platform right here for you and triple check what's happening here. But I can almost guarantee you that these 37.50, 35s look a little bit better than that. Okay. Anyway, so there's that. Now let's go ahead and take a look at another trade. Okay, if I'm bearish on Mylan, what does this look like? Now, see, this is what we're talking about here. Look at this 34.50 call being 209, right? Anywho. So if I'm bearish on Mylan, what's something I can do is I could sell a call spread here, right? So this is what I can do. I can sell this 37 a little bit out of the money, right? And then I can cover myself by buying the 30, you can do the 39s or 38.50 or the 38s. Let's look at the 39s since we thought that was, all right. So now what does this look like? This looks a little bit more normal. So you got 127 is essentially the middle where you would probably be able to sell this $37 call. And then you can buy the protection. You can buy the 39 call. That's going to cost you basically 55 cents, right? So 72 cents is the amount of money that you'll be able to take in here and then add that to the difference in the strike prices, or take that away from the difference in strike prices. That's 128. So take the 72 divided by 128, and this is what you could get, a potential 56% return short the 37.39 call spread if you are in fact bearish. Okay, now let's recap. A, Yahoo Finance tried to make my job very difficult today. Thanks for that, guys. B, if you see something in one of these chains that just flat out doesn't look right, it's probably not right, okay? So double check your data. Obviously, this is, you know, for educational purposes, so we're on Yahoo Finance, kind of trusting what they have there. But whatever your trading platform is, whatever it is, Thinkorswim, Zacks Trade, TradeStation, whatever, make sure you got the right spread on, and it shows you specifically kind of what these prices are, what the bid is, what the ask is, and make sure that there's no adjustments inside of those options contracts, right? Because it happens sometimes. Now, the Yahoo Finance feed, I'm not sure what's going on here. That's okay. It does look like the other one that we put on, talking about the call side, the short call side. That looks a lot more normal. On the short put side, I don't know what to tell you guys. It would take more than 2 minutes of me live on a camera to figure out exactly what's going on. So, hey, live TV, fun stuff. Anyway, so bullish or, in my humble opinion here on Mylan, am I bullish or bearish on an options trade here on Mylan? I'm going to be a little bit bearish on Mylan, and again, the stock's so oversold, right, that it's risky for me to come out here and say, yeah, it's going to go down further, right? But you do have this overhang of the EpiPen situation, and you have the competitor that's going to enter the marketplace, and that's a big chunk of their business. So with all of this negativity surrounding Mylan, I think I would have to be more of a bear on this stock than I would be a bull. Now, unfortunately, Yahoo Finance tried to make me look stupid today and be very confusing in their options chain, and the pricing being all wrong. So make sure you got your pricing correct. But I think that looking at that short 37.39 call spread into November 18th might be the way to go. In order to cash in on that, shares of Mylan would have to close below $37 at expiration on November 18th. So just a week and a half, well, 2 weeks away, you would have to see Mylan shares at or below where they are now, essentially, is what you were betting on if you were looking at that trade. So again, guys, questions, comments, concerns, and please don't tell me, you know, it's all my fault. It's Yahoo Finance. I don't want to blame them either, but sorry, it happens. livetrader@zacks.com. Go ahead, shoot me a quick email. Let me know how excited you are to hear about NVIDIA and Disney tomorrow, which I promise that won't blow up because the chain will be correct. And we'll just go from there. So I will see you guys tomorrow here at 1 o'clock for NVIDIA. Have a good one.